Over the past few years, a quiet revolution has been unfolding in the world of finance. While much of the global attention has been fixated on trade wars, economic sanctions, and the ongoing push for digital currencies, one significant event has been taking place largely under the radar: China's massive buying spree of gold. What might seem like a simple accumulation of gold reserves is actually a complex and strategic decision with far-reaching consequences. In this video, we will explore why China has been aggressively purchasing gold, the implications this has for its economy, and how it could shake up the global financial system as a whole. We'll dive into the specifics of China's gold reserves, the broader economic context, and the geopolitical motivations behind this surge in gold buying. By the end of this video, you'll understand why China's gold strategy could be one of the most important financial stories of the 21st century. Let's start with some hard data. Historically, China's gold reserves have been relatively small compared to other global powers. For much of the 20th century, China's central bank wasn't significantly focused on gold accumulation. Instead, it focused its efforts on building foreign exchange reserves, largely in US dollars and US Treasury bonds. However, things started to shift at the beginning of the 21st century. In the early 2000s, as China's economic growth surged, so too did its interest in diversifying its foreign reserves. By 2003, China's official gold reserves were just under 600 tons. Fast forward to 2019, and China's gold holdings had increased significantly to just under 2,000 tons. This gradual accumulation continued, and by the end of 2022, China was holding over 2,010 tons of gold, making it one of the largest gold holders in the world. But what really caught the world's attention was the massive surge in China's gold buying starting around 2023. The country was not just increasing its gold reserves, it was outpacing other major buyers by a wide margin. In 2023 alone, China bought over 224 tons of gold, a stunning amount that made it the largest buyer in the world. And this wasn't a one-off event. China had also been the second largest gold buyer in 2022, with over 60 tons purchased that year. This rapid accumulation of gold is part of a broader strategy. But why now? And why so much gold? To understand this, we need to explore both the historical context and the economic and geopolitical forces at play. Before we delve into the why, let's first take a closer look at what gold represents within China's foreign reserves. As of January 2025, gold accounted for just under 6% of China's foreign reserves, which is a significant increase from the less than 3% that gold represented before the COVID-19 pandemic. To put this in perspective, that's a rise from around $95 billion in gold reserves in 2019 to over $200 billion today. This shift is not just about increasing the absolute amount of gold China holds. It's about changing the overall structure of China's foreign reserves. For decades, China's reserves were primarily invested in US Treasury bonds and other dollar-denominated assets. This strategy worked well for China during the 20th century when the US dollar was firmly entrenched as the global reserve currency. However, as the global economic and geopolitical landscape evolved, China began to reassess its reliance on the US dollar. The move toward gold as a key component of China's foreign reserves can be seen as a hedge against potential risks associated with holding vast amounts of US debt. More specifically, it's a way for China to diversify away from assets that are directly impacted by the economic policies of the US. Now, let's explore the bigger picture. The shift from dollar-denominated assets to gold is part of a much larger trend known as de-dollarization. De-dollarization refers to the process of reducing reliance on the US dollar in international trade, investment, and foreign reserves. And China is at the forefront of this movement. The reason for China's push toward de-dollarization is rooted in both economic and geopolitical considerations. For years, China has held a vast quantity of US Treasury bonds, assets that are denominated in US dollars. This means that China has a significant exposure to the US dollar and is dependent on the stability of the US financial system. However, as geopolitical tensions between the US and China have escalated in recent years, particularly under the Trump and Biden administrations, China has been seeking ways to reduce its exposure to the US dollar. One major driver of this shift is the risk of US economic sanctions. In recent years, the U.S. has used its dominant position in the global financial system to impose sanctions on countries like Iran and Russia. As China looks ahead, it's increasingly worried that the U.S. could use the same tactics against it, especially as the two countries continue to clash over trade, technology, and global influence. By diversifying its reserves into gold, China is effectively insulating itself from the risk of being financially isolated in the future. But de-dollarization isn't just about avoiding sanctions. It's also about reducing China's dependence on the U.S. dollar in international trade. Over the years, China has worked to promote the use of the Chinese yuan in global trade, especially in the Asia-Pacific region. Gold, as a tangible, universally accepted asset, offers a safer alternative to dollar-denominated trade. One of the most immediate effects of China's gold buying spree is its impact on global gold prices. When a country as large as China buys significant amounts of gold, it inevitably causes a ripple effect throughout the global market. The increase in demand for gold puts upward pressure on prices, which benefits other gold holders, such as mining companies, central banks, and investors. As of 2024, the price of gold has already seen a substantial rise, and much of this can be attributed to China's increasing appetite for the precious metal. While gold is traditionally seen as a safe haven asset, something investors flock to during times of economic uncertainty or geopolitical tension, China's purchases add another layer of support to the price. This is especially true when you consider the global economic instability and the uncertainty surrounding U.S. fiscal policy. In fact, many analysts predict that the price of gold could rise even further in the coming years. Some financial institutions, including J.P. Morgan and PIMCO, have projected that gold could hit $3,000 per ounce, or even exceed that figure, depending on how China and other emerging markets continue to accumulate gold. The rising price of gold could also trigger a wave of buying from other nations, especially those looking to diversify away from the U.S. dollar. If this happens, we could see a prolonged period of high demand for gold, which would drive up its price even more. While much of China's gold buying activities are well documented, there are some intriguing reports suggesting that China may have been buying even more gold than is officially acknowledged. Analysts have pointed to the possibility that China's central bank, along with state-owned banks and other undisclosed channels, could be quietly accumulating gold on the side. If this is true, it would mean that China's true gold reserves could be significantly higher than the official figures suggest. Some estimates have placed China's total gold holdings at over 3,000 tons, well beyond the 2,280 tons that are officially reported. However, because of the opaque nature of China's gold purchases, it's difficult to confirm the accuracy of these reports. For now, we'll stick to the official data, but it's an interesting possibility to consider, especially given China's history of keeping certain financial maneuvers under wraps. Gold's enduring appeal as a safe haven asset cannot be overstated, especially in times of geopolitical uncertainty. Over the past decade, we've seen several instances where the value of gold surged during periods of crisis. Whether it was the financial crash of 2008, the rise of populism in Europe, or the ongoing tensions between the U.S. and China, gold has consistently proven to be a reliable store of value. For China, the appeal of gold is particularly strong in light of the increasing risks associated with holding U.S. Treasury bonds. Unlike U.S. Treasuries, which are subject to the decisions of the Federal Reserve and the U.S. government's fiscal policies, gold is an independent asset. It is not tied to any single nation's monetary policy, which makes it an attractive alternative for countries looking to safeguard their wealth from external shocks. As China continues to build its gold reserves, it is signaling that it sees gold as an essential component of its long-term economic strategy. But China is not alone in this. Other countries, especially those in emerging markets, have also been increasing their gold holdings, further driving demand and supporting the price of gold. So, what does all of this mean for the future of global finance? As China's gold reserves continue to rise, we could see a shift in the global economic balance. For one, China's growing influence in the gold market could alter the traditional dominance of the U.S. dollar and shift the balance of power in the global financial system. If China and other emerging economies continue to move away from the dollar and towards gold, we could witness a revaluation of currencies and a realignment of global trade. The implications for global investment, cross-border finance, and currency markets could be enormous. In the long term, this trend could help pave the way for a new global financial order, one where the dominance of the US dollar is no longer as secure as it once was. If this happens, gold could play an even more central role in the global financial system, acting as a stabilizing force during times of uncertainty. In conclusion, China's massive gold buying spree is a strategic move that could have far-reaching implications for both its own economy and the global financial system. By diversifying its foreign reserves away from the US dollar and into gold, China is positioning itself for a future where it has more control over its economic destiny. And as China continues to assert itself on the global stage, its gold reserves will likely become an even more important tool in its geopolitical arsenal. Gold's role as a safe haven asset, along with China's growing influence in the gold market, means that we could be entering a new era of global finance, one where gold plays a more prominent role in the financial landscape. What do you think about China's gold strategy? Could this mark the beginning of a new global financial order? Let us know your thoughts in the comments below. Thank you for watching. Please don't forget to like, comment, and subscribe for more insights on the world of history, economics, and curiosities.